January 30th, 2026. President Donald Trump just made one of the most consequential financial appointments of his second term. Kevin Warsh, a 55-year-old former Federal Reserve governor, nominated to replace Jerome Powell as Fed chair when Powell's term expires in May. Within 48 hours, something extraordinary happened. Silver, which had been trading near all-time highs of Rs 410 lakh per kilogram in India just days earlier, crashed Rs $60,000. MCX silver plunged from Rs 395 lakh to Rs 3.50 lakh per kilogram. That's an 11% drop in a single weekend session. But here's what most people miss. The dollar index, which had been sliding to 4-year lows of 95.5, suddenly reversed. It jumped back, above 97 on the Warsh announcement. And when the dollar moves, everything in India moves with it. Let me show you exactly what's happening, how Trump's Fed chair pick connects to silver prices and Indian rupees, why the USDINR exchange rate is the hidden variable nobody's watching, and what this means for Indian investors. The Kevin Warsh factor. What changed on January 30th? Kevin Warsh served on the Federal Reserve Board from 2006 to 2011. He was 35 when he joined, the youngest Fed governor in decades. He worked directly under Ben Bernanke during the 2008 financial crisis as the Fed's primary liaison to Wall Street. Here's what matters for silver. During his previous Fed tenure, Warsh was hawkish, opposing excessively low interest rates. But recently, something shifted. In late 2025, Warsh began making statements aligned with Trump's preferences on lower rates and dollar concerns. Markets call this a chameleon approach, and that's exactly why silver crashed when his nomination was announced. Silver had been rallying on assumptions that Powell's replacement would be extremely dovish, willing to cut rates aggressively and keep money easy. Easy money weakens the dollar. A weak dollar makes dollar-denominated commodities like silver more expensive. But Warsh's appointment signaled something different. Yes, he'll likely cut rates more than Powell, but he's not seen as reckless. He's viewed as someone who will maintain Fed credibility and won't sacrifice the dollar's stability just to please Trump. So the market repriced, the dollar strengthened from 95.5 to 97 on the DXY index. Silver fell from $34 per ounce to $24, a 29% crash. And in India, that dollar strength hit twice through the global silver price and through the rupee. The double impact. How dollar movements hit Indian silver prices. Here's the mathematics that every Indian silver investor needs to understand. Silver trades globally in US dollars per troy ounce, but in India, we buy in rupees per gram or kilogram. The conversion formula is Indian silver price in rupees per kilgi equals global silver price in dollars per Oz, multiplied by USD/INR exchange rate, multiplied by 32.15 conversion factor, plus import duties of 15%, transportation costs, dealer premiums, and GST. Here's where it gets critical. Indian silver prices are hit by a double impact when the dollar strengthens. Impact 1. Global silver price in dollars falls from $34 to $24, that's 29%. Impact 2. The rupee often weakens against the dollar during U.S. monetary tightening expectations. USDINR moved from around 89.5 to 91.5, a 2.2% rupee depreciation. These don't just add, they multiply. Let me show you the actual math. Before Warsh announcement, silver was 34 Oz, USD/INR was 89.5. Base calculation, $30.32.15, R is 89.5, or 97.783, so with duties, premiums of approximately 40% markup, approximately R1 to 37,000 kilos. MCX market price, R395 lakh kilos. After Warsh announcement, silver was 24 Oz, USD/INR was 91.5. Base calculation, $24.32.15, or 91.5, or 76.07 kilo. With duties, premiums, approximately Rs 99,000 kilos. MCX market price, R3.50 lakh kilos. The combined effect, R45,000 drop, or 11.4%. What many Indian investors don't realize is that the USD/INR rate is often the more stable variable. While global silver can swing 20-30% in weeks, the rupee typically moves 1 to 3% in the same period. But that 1 to 3% compounds with the global move, creating amplified impact in rupee terms. The USD/INR dynamic, India's hidden vulnerability. Let's talk about what most Indian investors ignore, the dollar-rupee exchange rate. As of February 2nd, 2026, USD/INR is trading around 91.53. That's near all-time lows for the rupee. For perspective, in January 2014, $1 bought Birjam R62. In January 2020, R71. In January 2024, R is 83. Today, R is 91.53. The rupee has depreciated approximately 48% against the dollar over 12 years. That's an average of 4% per year, every year, compounding. Why is the rupee at record lows right now? 3 factors. First, foreign portfolio investors pulled out nearly $3 billion from Indian equities in January 2026 alone, following $18 billion in outflows during 2025. When foreign money leaves, they sell rupees to buy dollars, pushing USDINR higher. Second, India's trade deficit remains significant. We import more than we export, especially oil priced in dollars. Rising oil prices from Middle East tensions mean India needs more dollars, weakening the rupee. Third, U.S. interest rates relative to Indian rates. If the Fed keeps rates higher than markets expected under Warsh, dollar assets become more attractive, strengthening the dollar against the rupee. Here's the math for silver investors. Every 1 rupee move in USDINR changes your silver cost by approximately 1.1%. Example at $24 Oz at USDINR per US 90 base price, R69,480 kilo. At USDINR 91 base R 723 kilo, that's 1.1% higher. At USDINR 92 base price or 79.92 kilo, that's 2.2% higher. On 10 kilograms of silver, that's our 15 120 difference just from currency movement, even if global dollar prices don't change at all. The rupee doesn't move in small increments during crisis periods. In September 2022, the rupee fell from R79 to R63 in a single month, a 5% move. That translates to 5% higher silver prices in India, even if global prices stay flat. So, when thinking about silver as an inflation hedge in India, you're betting on 2 things: global silver supply-demand dynamics and USD-INR stability. Right now, with the rupee testing record lows, that stability looks questionable. The Fed meeting, February 9th to 10th, could be the next catalyst. The Federal Reserve's FOMC meets February 9th to 10th to decide interest rates. According to Bloomberg data, markets are pricing in an 87.2% probability of a 25 basis point rate cut, taking the Fed funds rate from 4.25 to 4.50% down to 4.25%. But here's the tension. Jerome Powell is still Fed chair until May. This meeting is Powell's decision, not Warsh's. And Trump has been publicly pressuring Powell to cut more aggressively. Powell has maintained Fed independence, making clear the Fed will cut only when inflation is under control. January data showed core PCE at 2.4% year over year, still above the Fed's 2% target. Here are the scenarios. Scenario 1, Powell cuts 25 basis points with 60% probability. Dollar shows modest weakness. Silver recovers 1-2 Oz. Indian silver gains are 3,000, 5,000 $2. Scenario 2, Powell holds rates steady with 30% probability. Dollar strengthens further. Silver falls another $1 to 3 Oz. Indian silver drops from 1,000, 10,000 $. Scenario 3, Powell cuts 50 basis points with 10% probability. Dollar shows significant weakness. Silver surges $3 to 5 Oz. Indian silver gains 10,000, 20,000 $20 kilo. My observation based on Powell's recent statements. Scenario 1 is most likely. A 25 basis point cut with language about monitoring inflation closely and proceeding carefully. Dovish enough to acknowledge economic slowing, hawkish enough to maintain credibility. For Indian silver investors, this likely means a modest bounce from current RMS 3.50 lakh levels, perhaps back to R355, 3.60 lakh by mid-February. Historical patterns. What 2013-2014 teaches us. Let me take you back to a similar setup, 2013-2014. In May 2013, Fed Chair Ben Bernanke hinted at tapering quantitative easing. The taper tantrum began. The dollar surged. The rupee collapsed from Rs 54 in May to Rs 68 by August, a 26% depreciation in 3 months. What happened to silver? In dollar terms, silver fell from $23 to $19, a 17% drop. But in rupee terms, silver actually stayed relatively stable because rupee depreciation offset the dollar price decline. May 2013, silver was $23 Oz, USDINR was R at around 54. Indian silver was approximately $640,000. August 2013, silver was 19 Oz, USDINR was R68. Indian silver was approximately $41,500. Silver in India went up in rupee terms, despite falling in dollar terms. The lesson? During periods of dollar strength, Indian investors can see rupee-denominated silver prices hold better than global prices suggest. The rupee offset provides a cushion. When the rupee stabilized in 2014 and global silver started recovering, Indian silver surged. From August 2013 to March 2014, silver went from $19 to $21 in dollars, an 11% gain. But in India, silver went from Rs 41,500 kiloliters to Rs 48,000 kiloliters, a 16% gain, as the rupee continued weakening. The pattern, rupee weakness during dollar strength cushions the downside. Then, when silver recovers in dollar terms, Indian investors get amplified gains if the rupee remains weak. Investment strategies. 3 approaches for different risk profiles. I'm not a financial advisor. This is educational analysis. But based on the patterns shown, here are 3 frameworks to think about silver in India right now. Strategy 1, conservative hedge, physical silver in small quantities. For inflation protection and currency diversification, not speculation. Observation, the rupee has depreciated 4% annually against the dollar over 12 years. Your rupee purchasing power for imported goods declines steadily. Approach, allocate 5 to 10% of savings to physical silver, buy smaller quantities like 100 grain, 500 grams from reputable dealers, store securely. Entry point, current levels around Rs 3.50 lakh kg are 15% below recent highs. If it stabilizes here or drops to Rs 3.40 lakh, that's the buying range. Exit strategy, this isn't for selling. Hold 5 to 10 years minimum as currency diversification. Risk, silver could fall to Rs 3.00 lakh if both dollar price and rupee strengthen. But over a decade, silver historically maintains purchasing power better than currency alone. Strategy 2. Tactical trader. MCX futures for dollar-rupee arbitrage. For experienced traders willing to take higher risk. Observation, USDINR and global silver often move out of sync for days or weeks, creating arbitrage opportunities. Approach, trade MCX silver futures with tight stop losses. Look for divergences between global and Indian price movements. Entry point, wait for days when global silver is down 2% plus, but MCX silver is down less than 1%, suggesting rupee weakness is cushioning. Short-term bounce likely. Risk management, use 3 over 5% stop losses. Futures are leveraged. Losses can exceed capital. Only trade with money you can afford to lose completely. Strategy 3. Long-term accumulator, SIP and silver ETFs. For believers in silver's long-term fundamentals who want to avoid timing volatility. Observation, silver's industrial demand is growing through solar, EVs, electronics. Mine supply is constrained. Over 10 plus years, fundamentals are bullish. Approach, systematic investment plan. Allocate a fixed amount monthly like Rs 5,000 or Rs 10,000. Buy silver ETFs or digital silver. Why this works. Rupee cost averaging. When silver is Rs 3.50 lakh, you get X grams. When it falls to Rs 3 lakh, you get more grams. When it rises to Rs 4 silver lakh, your earlier purchases are worth more. Exit strategy. Set a target allocation of 10 to 15% of portfolio. Once reached through SIP, rebalance annually. Union Budget 2026. Factor, import duty risk. India currently imposes 15% customs duty on silver imports. On February 1st, the Union Budget maintained status quo, no change. This was positive as any increase would have directly raised domestic prices. But here's the risk. If the government wants to discourage silver imports to reduce current account deficit, they could raise duties to 20% or 25%. Current scenario with 15% duty. Global silver at $24 equals Rs 70,607 kiloliter base. After 15% duty, Rs 81,198. After margins, GST, approximately Rs 1,000 kiloliter. MCX, equivalent Rs 350 lakh kiloliter. If duty raised to 25%, base remains Rs 7,607 kilo. After 25% duty, Rs 88,259 kilos. After margins, GST, approximately R1,8,000 kilos. MCX equivalent, R a 3.78 lakh kilogis. That's Rs on 28,000 kilos higher just from duty increase, even if global prices stay flat. Watch for RBI expressing current account concerns, import data showing silver surges, or government statements about discouraging precious metal imports. These signal potential duty hikes in future budgets. The global supply deficit. Why fundamentals still matter. Amidst all the Fed and currency drama, underlying silver fundamentals haven't changed. According to the Silver Institute, silver is running a structural supply deficit. Global consumption exceeded mine production for the 7th consecutive year in 2025. Key numbers, total silver demand 2025 was approximately 1.221 billion ounces. Total silver. Supply 2025 was approximately 1.01 billion ounces. Deficit, 200 million ounces. The deficit is being met from above-ground inventories and existing stockpiles, but those are finite. Demand drivers are real. Solar panels. Installations doubled in 2024. Each panel needs approximately 20 grams silver. Electric vehicles up 40% year over year. Each EV uses 25 to 50 grams silver versus 15-28 grams in traditional cars. 5G infrastructure uses silver in semiconductors, antennas, circuitry. Industrial demand alone projected at 750 million ounces in 2026, up from 680 million in 2024. Supply struggles because primary silver mines represent only 20% of supply. The rest is byproduct from zinc, lead, copper. Mining. Base metal prices haven't been strong enough to incentivize new mine development. Existing mines see declining ore grades. This is the long-term bull case for silver. Regardless of Fed policy or dollar movements, the physical shortage is real. But reality check. These fundamentals take years to play out in price. Markets can ignore fundamentals for months if speculative positioning goes against them. Framework. Fundamentals determine where silver will be in 5 or 10 years. Policy and technical factors determine 3 or 6 month action. Right now, policy, meaning Fed and dollar, drives price. Over 5 years, supply deficits will likely drive silver to higher structural levels. The timeline, what to watch. February 9th at 10. Fed FOMC meeting could move Indian silver Rs 10,000, 15,000 TLALERG. Late Feb, early March. Warsh confirmation hearings will have moderate impact on trajectory. May 18th, Powell's term ends. Warsh takes over with high impact as market prices, new regime. June 2026, first FOMC meeting under Warsh will have very high impact as new policy becomes clear. Based on this, near-term meeting, Feb March shows high volatility. Good accumulation if you're long-term focused. Midterm meeting, April-May is transition period, probably ranging markets. Build positions gradually. Longer-term meaning June onward is when Warsh effect becomes clear. Market will have priced his first meeting. 3 key takeaways. First, Indian silver prices are driven by 2 variables that often move opposite. Global dollar price and USD to INR track both. Formula: change in Indian silver equals percentage. Change global silver plus percentage. Change USDINR plus percentage. Change premiums, dark duties. Currently, global silver is down approximately 30% from peaks. USDINR is up approximately 2%, meaning rupee weaker. Net in India is down approximately 25 to or 28%. Second, policy uncertainty creates opportunity for those who understand mechanics and risk for those who don't. Warsh appointment, May transition, Fed pressure all create volatility. If uncomfortable with volatility, avoid leveraged trading. Stick with physical accumulation over time. If comfortable, there are tactical opportunities and divergences between global and Indian prices. Third, long-term fundamentals remain intact. Silver supply deficit, industrial demand, green energy transition are multi-year trends. A Fed chair change doesn't alter these. Timeline matters. Trading 3 to 6 months. Watch Fed and USDINR obsessively. Investing 5 to 10 years. Focus on physical accumulation. Ignore short-term policy noise. What I'm watching. Personal framework. I'm monitoring 3 specific data points. Number 1, DXY levels. If DXY stays above 97, that's dollar strength. Bearish for silver and dollars, but potentially cushioned for India if rupee also weakens. Below 95 is bullish. Number 2, USDINR versus 92. Rupee at 91.5, 92. If it breaks above 92, meaning weaker, Indian silver holds better than global prices suggest. If it strengthens to 90 or below, Indian silver falls harder. Number 3, COMEX silver. Futures open interest, high open interest means leveraged positions that amplify volatility when liquidated. Low means more stable action. Currently, DXY is at 97 plus showing. Dollar strength. USDINR is at 91.5 at support. COMEX OI is moderate, declining. My read. Near term, Indian silver probably ranges R340, 360 LAC. Unlikely below R330 LAC due to rupee support. Unlikely above R380 LAC without dollar collapse. That's a 5-6% range. For traders, opportunities at extremes. For long-term investors, dips to Rs 3.40, 3.45 LAC look reasonable for accumulation. The bigger picture. Trump's Fed chair pick is one data point in a larger story of the dollar's slow decline as global reserve currency, India's integration into global markets, and precious metals in an era of unprecedented monetary expansion. Warsh might cut rates or not. He might maintain dollar stability or not. These matter for 6-month price action. But zoom out. The US owes $38 trillion, growing $2 trillion yearly. Interest alone is $1.2 trillion annually. Every administration, regardless of party, wants lower rates to service this more cheaply. The structural bias is toward easier money, toward inflation, toward currency debasement. Silver isn't magic, but over decades, it tends to maintain purchasing power better than pure currency. For someone in India with a rupee that's depreciated 48% against the dollar in 12 years, precious metal exposure isn't just speculation. It's portfolio diversification away from pure rupee risk. The Warsh appointment changes pace and path. It might slow silver's rally near term, but it doesn't change long-term direction. If you understand the mechanics, how dollar movements translate through USDINR into Indian prices, you navigate this better than most. Not perfectly. Nobody can time markets perfectly, but with better information and frameworks. This analysis isn't about predicting the future. That's unknowable. It's about understanding the present more clearly. The policy levers, the currency dynamics, the supply fundamentals. Armed with that understanding, you make more informed decisions. Whether holding physical silver long-term, trading MCX tactically, or simply understanding why your silver holdings fluctuate. This silver market isn't random. It follows patterns. Policy patterns, currency patterns, supply-demand patterns. Once you see the patterns, chaos becomes more manageable. Trump picked Warsh. The dollar bounced, silver crashed. Indian prices fell, but patterns remain. And patterns are what matter over time. Stay informed, track the data, understand the mechanisms, and make decisions based on your own risk tolerance and timeline, because nobody can tell you what to do with your money. But understanding how the system works, that's power, that's knowledge, and that's the most valuable investment of all.